Okay, so we will continue to the next chapter of chapter 14, bank reconciliation. And what is actually bank reconciliation? Bank reconciliation is when it's about bank, yeah. So specifically talk about a bank account, yeah. Bank account is one of the asset of the company, okay, one of the asset of the company. Bank is the business cash that is placed in the bank. Okay, so far clear, yeah. We are focusing only on one account, which is bank account. Okay, clear, yeah. Next, in this chapter you will learn the purpose of bank reconciliation itself, and then what is this? And then why does balance side of cash book bank column? Remember, we are focusing only on bank account. Yeah. Now I want you to recall what we have learned before about cash book. I give you 1 minute. Cash book. Recall what we have learned about cash book. You know the template of cash book. Yeah. We have tables. Yeah. And then we have cash and bank in this, in the different column in the debit side as well as in the credit side. Do you remember? Okay. Okay, 1 minute's done. Yeah. So we are talking about cash book specifically on the bank column only. Once again, cash book on the bank column only. Yeah. And then you also will learn why does balance in the cash book of bank column will be different in the balance side of the bank statement. Okay, I will explain to you about bank statement in a while. Yeah. Number 3, why the bank account may not agree with the bank statement. Number 4, the stages of bank reconciliation. Number 5, update the cash book to find the correct bank balance. Yeah, to find the correct bank balance or balance of the cash at bank. Yeah. And then lastly, you are required to prepare a bank reconciliation statement. And then next, the advantages. This is theory, the last one. Yeah, the advantages of bank reconciliation. Now, reconcile. What is actually reconcile? We are trying to fix. Yeah, we are trying to fix our bank account. Yeah, our bank account have we will have an amount in the bank account, but the amount is not correct in terms of the amount. Yeah, so I want you to imagine that we have a cash book, we have a business over here, and we have a bank over here. Yeah. Oh, so this is cash book. And this one is bank. Okay, once again, bank is business cash that is placed inside the bank, correct? So it means we will deal with two different entities. We, as the business that has a cash book, yeah, and then we will deal with the bank, which will have a bank statement. Okay, now imagine that we're not talking about the business. Now we're talking about you. Yeah, you have a money. Let's say you have 5 million rupiahs. Yeah. Now 5 million rupiahs, you don't want to keep it on your hand, but you want to keep it in the bank, right? So you go to the bank, you put the money in the bank, and then you will get a book, yeah, that is called bank statement. Okay, now it is actually account book, but in terms of business we called it as bank statement. Okay, so the point is, you, if you are, let's say this is you, yeah, Now, you will record every single money that is in and out. You will record it in your own notes, right? Of course, that is your money. You have to keep a record of that, yeah? And then at the same time, when you deposit the money to the bank will also make a record, yeah? Every money in and out, they will have a record on that. So the point is, two different people or two different entities will record money in and money out. Okay, imagine that it is you, I am the bank. You record your money in and out to the bank. I am recording the money in and out that comes from you. So logically speaking, at the end of the month, our record will show the same amount. Is that clear? Yeah. At the end of the month, your record and my record, yeah, definitely will show the same amount because I'm recording your expense and your income, and you're recording your money in and out as well, right? Right? You agree with me?
Yes, Miss.
Agree, yeah? Now, the point is, now, since you already know the situation, it's not always the same what you record and what I record, because there are some transactions that might misplace or some other parties are not aware of that. Okay, so what we will do in this bank reconciliation chapter is to make corrections on both sides. Okay, so we will check what transactions that is not yet been recorded in your side, and then what not yet been recorded in the bank side. Okay, at the end of the month, you will make a reconciliation or make a corrections on both sides. That's our goal in this chapter. Yeah, clear enough? Yeah. So you will compare a bank account recording on the business side, yeah, and with the bank side. Since you already know if it is in your situation, yeah. Now we change this situation with the bank, with the business situation, yeah. So it is still the same. Business will record money in and out to the bank. We are not recording cash, yeah. We are not focusing on cash. Remember, we are focusing on bank. So we will record in the business. There will be a record on the bank in and out. Bank statement also have record in and out. Okay. What we will do next is to compare both of them. We will compare. Are they recording the same thing or not? If not, or if someone missed the other transaction from the other side, we will make corrections on that. Yeah. So this is basically that. Okay. Just focusing on one account, which is bank, and then we will make corrections on both sides. Yeah. Okay. Next. When we make a correction to the cash book on the business side, we called it as updated cash book. Meanwhile, when we are recording, when we are trying to make corrections to the bank statement, we called it a bank reconciliation statement. Yeah. Once again, we have to make corrections on this side as well as this side. Yeah. Cash book correction is called updated cash book. Meanwhile, bank statement correction is called bank reconciliation statement. Clear, yeah? Clear, yeah? Any question? No? Okay, good. Next, the purpose of bank reconciliation is to find the correct bank balance as well as to locate errors. Yeah, remember, error can happen in both sides, in business or maybe in the bank. Yeah. Okay, next. Bank will send a regular bank statement to its customers showing summary of transactions happens during the period. This period is always a month in our case. Okay. Covered by the statement and showing also the bank balance at the end of the period. Okay. So the bank statement that is sent by the bank will have a bank balance at the end of the month or at the end of the period. Okay. Now you will have to compare that bank balance with your record. Yeah, with your record in the cash book. Okay. At the same time, this business will prepare cash book regularly every month. Showing transactions happens in the business. Yeah. Now, these two from bank side and cash book must show the same. Okay. Once again, that's the clue. Yeah. Bank statement and cash book must show the same. Okay. Next, it is important to compare bank statement and cash book in the bank column only to find correct bank balance. If the two balances disagree, it is necessary to make reconciliation and find the correct bank balance account. Yeah. Next, why does balance of the cash book bank column different to the balance side in the bank statement? Now I'm going to redraw again. This is business and this is the bank. So this is business that has cash book. Is it too small? Oh yeah. And this one is bank that has bank statement. Okay, now talking about record, in accounting, you will find debit and credit. So it means in the cash book, you will see debit and credit as well. In the bank statement, you will see debit and credit as well. Okay, now in the business cash book, when we record transactions of bank in, yeah, when the business bank is increased, it will be shown in the debit side. Agree? Agree, yeah? Okay. Meanwhile, if the bank is decreased, it will shown in the credit side. So it means if you have a positive amount of bank, it will shown in the debit side. If it's shown an overdraft, it will shown in the credit side. Meanwhile, in the bank statement, money in will be recorded in credit. Meanwhile, money out will be recorded in debit. This is what happened when you see bank statement. So when you look at your cash book and you look and you compare it with bank statement, it will show like a mirror. Yeah, like a mirror. Yeah. So when you see debit, you will see credit in the bank statement. What recorded in the debit side of cash book will be recorded in the credit side of the bank statement. Yeah. Meanwhile, what be recorded in the cash book of credit side will be shown in the bank statement in the debit side. So it will be opposite. Clear enough? It will be opposite. Now, there is a reason for that. Why is it opposite? Because in the cash book, it is from the business point of view. It is explained here. It is from the business point of view and it is treated as an asset because it is owned by the business. Yeah. So it will appear in the debit side as positive and credit side as negative. Yeah. Logically speaking, bank, we're talking about a normal bank balance, which is a positive. Yeah. Now, bank statement is from the bank point of view. Yeah. Once again, cash book is from business point of view. Bank statement is from bank point of view, and the bank will treat the business bank as liability. So imagine that you are the business and you have the money. You deposit the money in the bank. You deposit the money to me. I'm the bank. Yeah. The more you deposit to me, the more debts I have to you. because it is not my money. It's not the bank money. Clear, yeah? So if I receive your money, the more I get your money, the more liabilities I have to you, because I have to return this money to you. This is not belong to me. Clear, yeah? So from bank's point of view, I will treat this money as my liability. That is why it will increase in the credit side. So every time the money increase, it will state it in the credit side because more liability comes to the bank. Meanwhile, from the business point of view, the more you get the money, the more you save the money in the bank, the more asset you have. Yeah, so that is why debit side affected. So clear, yeah? Clear, yeah? Any question? Any question? No? Okay, next, yeah? So you understand why does cash book bank balance is always different with the bank statement. It's always opposite, yeah? So the way you explain it is like this, yeah? Show the point of view, yeah? Because cash book is from business point of view and business will treat that as an asset. That is why it will increase in debit, decrease in credit. Meanwhile, from bank statement is from bank point of view and it will be treated as a liability, yeah? So it will increase in credit and decrease in debit. Okay, now, next, why the bank account may not agree with the bank statement. Now the reason, how could your cash book and bank statement are not the same? Because there are transactions that are not recorded in the cash book and that are recorded in the cash book, but not yet recorded in the bank statement. Or vice versa, yeah? That are transactions recorded in the bank statement, but not yet recorded in the cash book. Okay, now the reason for that is this. Items recorded in the cash book, but not in the bank statement. This is the regular reason why it is not shown in the bank statement. The first one is unpresented check. The second one, uncredited check. And lastly is errors in the cash book. Yeah. What is unpresented check? Unpresented check means that the business issued check to supplier, but the supplier did not yet hand it in to the bank. Okay, so here it is. Is it too small? Do you want me to make it bigger? Is it too small? Oh, good, yeah? Okay. Okay, I'm going to make a box on it. Okay, so once again, unpresented check is the business issued check to supplier, but the supplier did not yet hand it in to the bank. So logically speaking, the bank doesn't know that you just spent your money. Yeah. So imagine that you are the business again. You have a check. Yeah, you wrote an amount of money to pay to the supplier, and then you paid that to the supplier. Okay, so you will record in the cash book, your bank account will be decreased because you just issued the check. But the supplier did not have time to hand it in to the bank. Yeah, so maybe he handed in the check like maybe a week after you give the check, and meanwhile it's already been changing months. Yeah, maybe you gave the check in let's say September 30. Yeah, September 30. But then the supplier hand the check on October, let's say October 10. Yeah, so it means that you have a record on September, but the bank will have the record on October. So when you compare between September cash book with September bank statement, yeah, that transactions are not shown. Yeah, that transaction is not shown in the bank statement. Clear, yeah? Yeah, so again, unpresented check is spending money, yeah, but the bank, yeah, did not know that you just spent the money, okay? Meanwhile, uncredited check is the opposite from unpresented check. Yeah, uncredited check means that the business receive money or check, but the bank did not know it yet. With the same reason as well, maybe you receive, maybe the business received the check but not yet handed in to the bank. Yeah, so the bank did not know that you just received the money on September, let's say. Yeah, they will know when you hand the check to the bank, or it is still on transit. Yeah, usually if different bank make a transfer, let's say Nara paid to Fisher. Nara used, let's say, BCA Bank. Meanwhile, Fisya used, let's say, Mandiri Bank. Yeah, and then the amount is quite big. Let's say 200 million rupiahs. Let's say, yeah, that transfer with that amount of money, yeah, requires some time, maybe about 2 days. Yeah, usually 2 days or maximum 3 days. Okay. Now, Nara sent the money on September 30. It means it will be still on transit. It will be still on process. So the bank, my side, will know it 2 days later or 3 days later that your money or that Fisya's money will be added on October. So from Fisya's point of view, Fisya cannot see that transactions on the bank statement in September because it will be entered in the bank on October. Yeah, so that kind of situation in reality, it happens. So at the end of the month, usually the bank or cash book will not show the same amount with the bank statement. Yeah, so this uncredited check will also be the reason why some transactions are not shown in the bank statement. Yeah, can be cash in transit, still in the process, or maybe you did not yet handed in the check yet. Yeah, or maybe cut off. Yeah, usually bank has a cut off transactions around 25th of every month. Yeah, so if you make transactions from 26 to 30, it will be on pending or postponed because the bank is already closed the book. Yeah, and it will be shown on the next month. It can be happen as well. Yeah, so the point is, money in that not yet been recorded in the bank statement is called uncredited check. Money out that not yet been recorded in the bank statement is unpresented check. Clear, yeah? Do not mix it up. Okay, do not mix it up. Okay, next one is errors in the cash book. Of course, if cash book, or in this case, the business made mistakes or made error, of course, the bank will not know. Yeah, of course, the bank will not know. So in this case, when the error happens in the cash book, what should you do? Yeah, when the error happens in the cash book, we must make correction inside or in the updated cash book. Okay. When the error happens in the cash book, make corrections in the updated cash book. Meanwhile, these two, unpresented check and uncredited check, the correction made in bank reconciliation statement. There you go. Okay. Yeah. Why do you make this corrections in the bank reconciliation statement? Because bank statement is the one that is not yet recording it. Okay. When we make a corrections on bank statement, we call it bank reconciliation statement. So see the difference here? When you see unpresented check and uncredited check, the one that you need to update is bank reconciliation statement. When you see an error in the cash book, the correction must be made in the cash book, not in the bank statement, because bank statement did not make any error. Yeah. And students' common mistakes, when they see that, they put these errors in the cash book and make corrections on the bank recon. Yeah, that is students' common mistakes. Yeah. So please pay attention who made the mistakes or who did not yet make a record, and then you make adjustments on that side. Yeah. Next, any question? No, yeah, okay. If I'm too slow, please let me know. Yeah, I don't want to make you sleepy. Items recorded in the bank statement, but not in the cash book. So now we're talking about what kind of transactions that cash book did not know. A lot. When we're talking about transactions happens in the bank, there are so many transactions happens in the bank that runs automatically, such as administration. Yeah, they will not tell you or call you and say to you that I will charge you an administration every month or every single month they will call you. No. Yeah, they will say to you when you open an account in the bank, they will say it will be automatically charged to your account and it will automatically deducted your account. When will it be deducted? Only the bank knows. Sometimes you will miss it because there is no notification. Yeah, some transactions like that happens in the bank statement, but the cash book will be late to know. Yeah, late information. You will know that there are transactions that's automatically deducted or added to your account, but not yet updated to the cash book. Yeah, so this is all. Yeah, the first one is bank charges. Bank charges is administration. Yeah, do not confuse with the name. Okay, so get used to this name. Bank charges is called administration. It means money out. Yeah, it will deducting your money. Next is bank interest. Bank interest is when the bank give you a reward because you save the money in the bank. Yeah, so usually when you save the money, the more money you save that in the bank, they will give you a reward, and then that reward is called interest. Yeah, now bank interest is money in to you. Yeah, so you know the difference. Yeah, I believe you understand. Bank interest, money in. Bank charges, money out. Okay, this is money in and money out. This is money in. Okay, this under check. Now this under check, what is this under check? This under check is when you record a receivement of a check. Yeah, but then the bank, when the bank want to process this check, suddenly this check is rejected. Reason why it is rejected? Because probably the check is broken. The signature in the check is not it's not the same. Yeah, or maybe insufficient fund. Yeah, so the person who wrote the check to you, somehow did not have enough money to pay you. Yeah. So when you want to cash it out to your account, that person did not have the money. So the bank must cancel the check. Yeah, it happens also. Once again, check received in the bank is rejected or canceled, or it is insufficient. Yeah. So logically speaking, when this check happens, the money that is previously recorded as in, you must record it as out. You must cancel. Yeah, you must cancel the transactions before. Yeah, once again, because it is this check, so you have to cancel the recordment when you add this check before. For example, like this. I received the check on 10th of October, okay? And then the amount is $1,000. So I go to the bank, I put the check to the bank, and the bank added the money to my account. My account added $1,000, okay? After 5 days, it is still failed and canceled by the original bank on the person that gave me the check. Okay, so after 5 days, the bank automatically will deducting my $1,000 that is added on on October 10th. Okay, so on October 15th, I will see my bank account. Yeah, on October 15th, negative 1,000, because it must be canceled on the transactions before, because previously the bank added 1,000, right? Because I gave the check to the bank. Because it is dishonored, so the bank must deduct it again a few days later, okay? Because the bank must cancel that check. Yeah, because it is broken, probably rejected by the bank, canceled, or insufficient fund. Yeah. Any questions so far? Yeah. Okay. For those who are at school, I know it is close to dismissal. Yeah. If it is
Yes, miss.
if it is close to dismissal and you have to leave the Zoom, it's okay. Once again, I recorded this session so you can follow and you can see again the recording later. Yeah. So if you need to leave the Zoom, then you can leave. If you still have time to stay in this class, then you are allowed to be in here. Yeah. So whatever your teacher said at school, okay? Okay, continue. Yeah. Next is standing orders. What is standing orders? Standing orders is when the business, yeah, it is an order to the bank to pay expense regularly and automatically. So that's the simple explanations that I can give to you on standing orders. For example, Putih have a bill, phone bill, yeah, phone bill, handphone, and then Putih say to the bank, please pay my phone bill every month. Yeah, please pay my phone bill every month. Since Putih is a business using the business number, and the payment of the phone bill is always the same every month. Yeah, it always the same every month. So let's say every month 150,000, yeah, or maybe 200,000 rupiahs. So the bank will automatically pay that expense regularly every month and automatically without telling you. Yeah, so it is called standing orders. Yeah, and is this fixed amount? Yeah. Now, direct debit is same like standing orders, but the amount is not fixed or the same. Yeah. Okay, so the difference between standing order and direct debit. On the direct debit, the amount that is charged or deducted from the account is not the same every month. What is the example of direct debit? Such as water expense. Water expense will be billed every month. Yeah, it will appear every month. But how much? It depends on how much you use the water, right? Yeah, so it's going to be different from month to month. Okay, so another one will be electricity. Yeah, so if you say to the bank, please pay my electricity bill with this amount, with this number, yeah, every month. So the bank will deduct that from your account, but usually it is not the same every month because electricity, water will be charged not the same every month. Yeah, it depends on how much you use it. Okay, clear enough? Clear, yeah? Next, credit transfer. Oh, I'm going to put the sign over here. This one is money out, yeah? This one is money out. This one is money out. This one is money out. And this one is money in. Okay. Now, credit transfer. Credit transfer is money in. What is credit transfer? Usually, there are some customers of you, yeah, who has a really disciplined time, yeah. So they will transfer what they owed to you without telling you, yeah. So they just transfer their debts to you. They paid their debts, but not informing you in the first place. Okay, so the point is you will receive a money, but you did not know that your customer has just paid you. Yeah, so it will be shown in the bank statement. Yeah, so this one is customer paid their debts using bank transfer without prior information. So they just paid you like that. Yeah. So of course, you as the business did not know that you just get the money. That you just received the money. You did not know that until you see the bank statement. Yeah. Now, dividend received next. Dividend received is also positive. And what is actually dividend received? This is profit given, yeah, from sharing profit, yeah. Sharing profit given from investment. Yeah. From stock investment or shares. Yeah. So sometimes as a business, we have an investment, we have another company's shares. For example, Nicole have Starbucks shares. Yeah. She bought Starbucks shares, and every 3 months, Starbucks will give their dividends to the business. Yeah. Definitely it will automatically send to the account, and you did not have any informations or prior informations that you received the money. So dividend received is also one of the reason why there are transactions not appear in the cash book, but it is shown in the bank statement. Yeah. Next one is error in the bank statement. Of course, if the bank made an error, cash book will not know it. Okay. Now, if the error made in the bank statement happen, yeah, you must make correction in the bank reconciliation statement. Okay. Now, meanwhile, all of these, okay, all of these will be made or corrected in updated cash book. There you go. Yeah, so all of these bank charges until dividend received. If you see these transactions, you will updating your cash book with all of these. Yeah, but the error only the error in the bank statement that will be recorded in the bank reconciliation statement. Yeah, so clear, yeah, because these transactions are not shown in the cash book, so you have to add them in the cash book. Meanwhile, error in the bank statement, you must make corrections in the bank statement, which is bank reconciliation statement. Yeah, so far, any question before we go to the example? Ntar anak Miss merosot. Any question? No, yeah, okay, continue. Now, how to make a template or how to make an updated cash book. Updated cash book is just a usualty account. This is how you will see the cash book. Yeah, I'm going to pick or choose only one side of the column, which is bank column. Yeah, I'm going to, I have closed the cash column. So this is only the bank column. Yeah. And then if you see, if you have balance BD in the debit side, if you have a positive balance, you put balance BD in the debit side. If you have an overdraft balance, you have to put it in the credit side. Now, let's take this one. All the deducting side will be recorded in the credit side because it's deducting the money. Yeah. So bank column deducted area in the credit side. Yeah. Bank charges, dishonored check, standing order, and direct debit. Okay. And then bank interest, credit transfers, and dividend received goes here in the debit side. Yeah. Oh, I forgot to put bank interest, but you get the point. Yeah. Okay. So this is added area or positive and negative. Yeah. And then as usual, at the end, you have to calculate balance CD. Yeah. After that, don't forget to carry it down to the next accounting period. So far, any question? No, yeah. Now, don't forget to put down error. I did not put error in this T account because error can be in either debit or credit. It depends on the error, yeah? Once again, don't forget, do not forget to make correction on the error. Okay, yeah, because I did not put the error here in the template because again, the error can be made, yeah, or the corrections of the error can be made either in the debit or credit. It depends on the error, yeah. Should you fix the error by adding the cash book or should you fix the error by deducting the cash book? Okay, it depends. Next, bank reconciliation statement. For bank reconciliation statement, is only like this one, yeah. So first you will start with balance as per bank statement. This is number one, balance as per bank statement. And then number two will be uncredited check. And number three will be unpresented check. But when I'm talking about balance, as balance will be divided into two, so pay attention. This one is balanced as per bank statement, and this one is balanced as per updated cash book. This one is per updated cash book, yeah? So, okay. So balance as per bank statement means that you will take this balance from the bank statement, yeah? Balance as per updated cash book is the result of the calculation here, yeah? Clear, yeah? So you will add with uncredited check, and you have to analyze that, and then you will deduct it with unpresented check, and then at the end you will get the result, yeah? So far, any question? Clear now? Okay, so how do you know that what you made here is correct? What you will get in here as the balance and what you get in here must be the same. Yeah, if your result here and result in here are not the same, it means you made mistakes. That's how you know that you make this corrections correct or not. Yeah, clear, yeah? Also the same, do not forget to make correction as well. Salah. Copy. Loh, kok hilang? Okay, so whenever you have the error happens in the bank statement, okay, you must make adjustment in either on the positive side or the deducting side. Yeah, once again, I did not put the error inside this the template because this error can be either positive or negative. Yeah, it depends on the bank mistakes. If you have to make a corrections by adding the bank account in the bank statement, then you have to put under the uncredited check. But if you have to deduct it, then you have to put it under the unpresented check. Is that clear enough? Clear, yeah? Okay, continue. Stages of bank recon. Now we are continue to stages of how we make corrections on that. First, you must compare bank account in the cash book. Yeah, compare bank account in the cash book with the bank statement. Okay, how? By looking on the debit side of the account and check it with the credit side. Yeah, debit side of bank will be matched with credit side of bank statement. Yeah, and then credit side of the bank account in the cash book must be matched with the debit side of the bank statement. Yeah, so that's the first step. Okay. Yeah, Puti. Next, updated the cash book by entering all transactions. So the second step is we make corrections to the cash book first. Yeah, so we update the cash book by entering all transactions recorded in the bank statement but not in the cash book, and correct any errors in the cash book. Yeah, next, balance the cash book and carry down the balance to the next accounting period. So basically number 2 here is this one. Number 2 is this one. By putting all of these bank charges, this honor check, standing orders, credit transfer, dividend, blah, 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 yeah, those who are not yet, which are not yet been shown in the cash book. So put all of them and then make, and then calculate the balance and then carry it down to the next accounting period. So basically that's number 2. Clear enough? Am I too fast? No ya? Soalnya Nicole udah ngantuk. Jadi I nggak mau pelan-pelan ya. Takutnya pada tidur semua. Number 3, prepare a bank reconciliation statement means that after you made updated cash book here, we continue to number 3, prepare bank reconciliation statement. First, you have to see balance in the bank statement. Yeah, first you have to see balance in the bank statement. Okay. Start with the balance shown in the bank statement, then enter all transactions recorded in the cash book but not in the bank statement. Means that you have to record it unpresented check as well as uncredited check. Yeah, if there are any errors in the bank statement, then make corrections in it as well. So practically number 3 is preparing this one. Clear enough? Clear, yeah? Okay, continue number 4. After you make all of that, check the balance from number 2 result and number 3 result. Yeah, the result should be equal. If it is not equal, know that you made mistake. Yeah, that's the indicator that you made mistake or not. Okay, clear enough? Clear, yeah? Let's jump into the question. By the way, up until what time is our class?
12.20.
It's
Okay.
20, Miss.
Okay. Next, the example is taken from the textbook, page 211. Yeah. Example 14.1. Sorry. Okay, next. The bank columns of Fatima's cash book for the month of April 2008 are given below. So in this question, you are given with cash book of Fatima's. So the business is Fatima's, yeah? Then we check on it. On April 1st, we have a balance of 2,970. It means on the beginning of April, the balance is positive. The bank balance is positive. And then you will see that Fatima received check from J. Datwani and ABC stores. And then she also banked in her sales, which is 1,460. And then she made a purchases. She made a payment to B. Malukani, and then TDCO, and then Dobal Limited. Yeah. So after those payment, at the end, her balance of bank is 2,834. When it carried down to the next accounting period of May 1st, it becomes, it's still 2,834 in the debit side. Yeah. Now, supposedly the bank statement that she will receive from her bank is the same amount, showing the same amount. Now let's see. Fatima's bank statement for the month of April is given below. Yeah. Now we see the first one is April 1 balance, which is 2,970 on the credit side. Remember, credit side in the bank statement is debit side in cash book. Now we'll see if this amount is the same with that. Yeah, remember, yeah, credit to debit. The same, yeah? So all good. And now Fatima received a payment. Receive payment from check number 6983 for 420 and receive dividend for 150. This is money in. And Fatima paid check number 2388 and then check number 2389 and then also paid automatically bank charges of 95. So these all payments, these are incomes, yeah, or money in. At the end of the month, the bank balance showed 3092 on credit, means 3092 positive. Yeah, now we see the cash book is 2,834, the bank statement 3092. Both are showing positive side. Yeah, so first for positive side, the same, but the amount are not the same. Yeah. Since the amount are not the same, then we definitely are going to make updated cash book as well as bank reconciliation statement. Yeah. When you see these two balance are not the same, definitely you will do that. Yeah. Tax information, it is discovered that Fatima has made an error on 10th of April and recorded purchases as 234 when the correct figure is 243. Now let's see, who made the mistake, cash book or bank? In here, in the bank statement, there is a payment of check 243. 243 exists, yeah? Is this the correct one or the wrong one? The correct one. So it means, what can you imply from this? What can you conclude? Who made the mistake? The error made in the cash book or the error made in the bank statement? Response?
Cash book.
Cash book, good. So if the error made in the cash book, we will make correction in the updated cash book. Okay. Now remember, this 243 is already correct. Already correct. Do not make anything on that. Yeah. So we have this, we have that. Now let's go to the step. You are required to prepare updated cash book as well as bank reconciliation. Yeah. Updated cash book and bank reconciliation statement. Okay. Step 1 is to compare. After you make a compare and you see that both sides are make a recording, so you put a checklist on both sides. Okay. We see that balance 2,970 on debit, the same with on credit in the bank statement. Then we put a checklist on that. It means both sides already recorded. J.20 for 420, even though we put J.20 here, but in the bank statement did not show J.20, yeah, but find out the same amount. Find the same amount. The same amount is 420, it's 420. Then we put the checklist. We put the checklist, yeah. And then 2117 at 217 is not shown in the bank statement, so we did not put it checklist on that. Purchases also did not shown here. Well, actually it is shown on 243. Yeah, actually it is shown. So I'm going to use red. This one is already correct. Okay, but I'm going to make a circle on this. It means that we have to make a corrections on this. Oh, it doesn't look like correction. Okay, here you go. Yeah. So okay, so 234 must be corrected. Okay, so the correct one is 243, right? So it means, what should you do? Should you make another entries in the debit side or in the credit side? The correct one is supposedly 243. That's supposed to be that amount. So are you going to make a correction in the credit side or in the debit side? Who can answer me? The business already record 234 in the credit side when she should record 243 in the credit side. So what should you do to make it right? Who can answer? Hello? Am I talking to myself? Ayo, respond. Larain?
Yes, Miss.
Yes, what do you think? What should I do? What should we do to make corrections on this? What should Fatima do?
Is it for the next one, right, Miss?
For the next one? Yeah. We should make a corrections in the credit side or in the debit side, looking at this situation. Fatima already put or already deducting her money with 234 when she should deducting her money with 243. To make this right, what should you do?
Put on the debit side.
Put on the debit side. By how much?
The remaining.
The remaining, yes. How much the remaining amount?
9.
9. Okay. So if you put 9 in the debit side, okay, focus on purchases here, yeah. So if you put 9 on the debit side, it will have a balance with 234 minus 9. How much is it? Because you put it in the debit side, different side.
Oh, so it's supposed to be in the credit side.
Supposed to be in the credit side because you deducting, yeah, because she deducting her money less than supposed to. Yeah, she deducting her money less than supposed to. So when we make a correction, we have to deduct again the money. That is why we have to put the corrections still in the credit side with $9. Yeah. So after we put the corrections $9, then it will become the correct amount, 243. Yeah. So but if Fatima deducting her money bigger than supposed to, then the correction must be in the debit side. Clear, yeah? Clear, yeah?
Yes.
Okay, so that's how are we going to do that. Okay, so after making checklist on both sides, now the next step is step 2. Prepare updated cash book and enter all transactions in the cash book and correct the cash book error. Yeah, so items appear in the credit side of bank statement which have not been ticked off must be debited in the cash book. Okay, so back to here. These one that are not yet ticked means they are not shown in the cash book. Clear, yeah? This 150 and 95, the one those two that not ticked, not shown in the cash book. So what should you do? You put these two, 150 and 95, to the cash book. So that is what we do. So after we put dividend 150 in the debit side, remember opposite, yeah? So 150 shown in the credit side. So it means you have to put it in the debit side, 150. And then the corrections that I ask you, yeah, that I ask you, 9, is put it here in the credit side. You agree on 9 over here, yeah? We already discussed above, yeah? And then bank charges is 95 because it is deducting the money. Debit in the bank statement, shown in credit in the cash book, okay? And then this balance, 2834, will be taken from the cash book over here. Yeah, do not take this one, but you must take the newest one or the latest. Yeah, so how we make the updated cash book? I repeat once again, take this balance, the latest balance, yeah, and then take these two transactions that are not yet been recorded in the cash book, and then put that transactions here. We start with balance still in May 1st. We put the dividend we put the bank charges, and do not forget to make corrections to the error. After that, calculate balance CD and then carry it down to the next accounting period. Now we have the balance of 2880. Yeah, clear enough? Next, after we make updated cash book, continue to make a bank reconciliation statement. We will start the bank reconciliation statement with balance from bank statement. Yeah, pay attention. You have to start with balance from the bank statement, not from the cash book. Yeah. Now we go back to the bank statement. This is our bank statement. Take the latest balance. This latest balance is 3092. Credit means 3092 positive. Yeah. Then put that here, and then we add transactions that are not yet been recorded in the bank statement. If we look at here, ABC Stores, Sales, TD, and Dobal, where can you find this? Check on your cash book. This cash book, 2171460 are not yet been ticked, means they are not yet been recorded in the bank statement. TD and Dobal are also not yet been ticked. Yeah. And please be careful. This 234, even though you did not tick it, but this is error made in the cash book. Do not take this one and put that in your bank recon. Students' common mistakes, take this 234 amount and then put that in the bank recon. Yeah, so please do not do that, because this purchases is actually already been recorded in the bank recon, which is 243 in the bank statement, sorry, 243. Yeah, but it is not shown in the bank statement because it is error made by the cash book. So bank statement should not follow the error. Yeah, so exclude this 234. So we only take this 2117, 1460, 31372, and 570. This is uncredited check, and these two are unpresented check. Ya, sebentar ya, Nak. Nah, udah ya. So we add them to, we deduct this two, and then at the end, balance shown in the cash book, 2880. Yeah. So step number 4, check result in updated cash book with bank reconciliation statement. Both amounts show the equal amount, which is 2,880. Clear, yeah? So from bank recon to 880, from cash book to 880. So equal. When it is equal, then your job is done. Okay.